Hey everyone, this is Connor from 0DTE Traders, and it's been a few weeks now since I've made a YouTube video, so here we are. I'm going to go over my weekly performance, how I've been approaching markets. We'll cover some market dynamics and what we could expect going forward. So first off, I've really dialed back my trading here over the past 2 weeks, really since we broke the flip and went negative gamma. Right, the market becomes a little bit more destabilizing. We get reduced liquidity, and my objective, more often than not, when we get into negative gamma, is really focusing on preserving my capital, preventing any sort of large drawdowns, because it is a little bit more of a challenging environment to trade. So I haven't been trading credit spreads due to the unfavorable risk reward. I've also dialed back my trades on butterflies. Just because picking direction has been a little bit more challenging, predicting volatility has been a little bit more challenging, and with that reduced liquidity, right, that is common in negative gamma, we're seeing these bid-ask spreads open up quite significantly. So I think just managing risk has been a little bit more challenging here on butterflies. I've really been focusing on just single options, long calls, long puts, and I've been trading them on the SPY. Lower risk, it's about 1/10 of the SPX, but some nice percentage gains here, 94% ROI, 144, even if we go back to the previous week, 150, 160, and when we do have losses, they are quite minimal, because we can get out real quick if it's not working. I tend to use stops on them, not hard stops, but definitely, playing levels and structure. But the point is here, my focus is really preserving that capital, preventing any sort of large drawdowns in a period of negative gamma. So when things start to get good again, I'm not busy digging myself out of a hole. I can go ahead and put my foot on the pedal and really ramp up some of the risk. For those that haven't been through our education, I just want to cover the concept of negative gamma real quick. This environment is characterized by higher volatility, reduced liquidity, and destabilizing price action. In this environment, it is said bears are in control as there is a higher demand for puts compared to calls. In negative gamma, dealers are short gamma, meaning they hedge by selling weakness and buying strength. So as the market goes down, they are sellers. As the market goes up, they are buyers, just exacerbating the price movement. With this hedging dynamic, you can see how you would get these market characteristics. Now, the lower the negative gamma, the larger the short gamma exposure. If we look at the total market gamma chart for the SPX, we can see we are very negative, the most negative we've been all year. Now, we just had option expiration, so this gamma should start to get reduced here. And if that does occur, we're going to start to gravitate back up to the zero line, right, the flip. And this reduction in negative gamma is going to force dealers to buy, right, particularly if the market moves up and volatility contracts. Of course, this could continue lower. We could get more extreme. There's no doubt about it. But the point is here, there is a likelihood now that we're going to start to see a reduction that could lead to a rather sizable squeeze in the markets. One more chart I want to highlight is the volatility risk premium. Now, this is just looking at implied volatility in gray compared to realized volatility. We got the 10-day in red and the 30-day in yellow, and we can see that there's a rather sizable gap here between what is implied and what has actually been realized in the market, which is a little bit surprising because we would anticipate a little bit more realized volatility given how negative gamma is. I think the point is here is that there's volatility to be sold, right? Unless we see realized vol really start to pick up here, traders may come out and start to sell volatility, right? We get implied vol, VIX down, get a bit of a VIX crush scenario, which again would force dealers to buy. So if we get that gamma reduction, we get that reduction in implied volatility, we could be squeezing to the upside. We are looking at the SPX on the daily chart, and we clearly see the weakness here from the past 2 weeks. We're down about 5% from the local high. And we did find support at this rising trend line on Friday, but the larger trend line does sit just below here, maybe at about 4,200, 4,250, depending on the velocity of the move. But this connects the market low here from October. So I ultimately think we are going to test this at some point. I think the question becomes, do the bulls stage a little bit of a bounce next week? We get a lower high and possibly another leg lower. Or does the market just fall out here and there's a bit of a risk-off move? I guess we'll find out. We've highlighted the potential for squeeze dynamics, so I think it's just to be cautious, shorting this market, particularly via call credit spreads at this juncture. If you see that vol compression, I mean, if you see VIX up, that's a different story. But if you're seeing VIX down 6, 7, 8%, the market could really go. And again, a squeeze-like day is just a sharp upside move, and the market tends to stay bid, so you just sort of grind like a dipless rally. Now, conversely here, if you get a really large spike in volatility, same sort of dynamic on the downside, you stay oversold, and the market just sort of bleeds lower, as we saw a couple days here this week. So risk is just elevated at this juncture on both sides. As far as key levels go, for continued downside, we're looking for a break of 43.50, a break of this structure, with 4,300 as really our downside target. Now, this is a pretty sizable level. It very well may be our put wall on Monday. So we would be looking for a bit of a bounce off that handle. Now, our put wall is at 43.50, the flip level at 4,400. This is as of Friday. So we had option expiration. These levels are likely to change and maybe quite sensitive the first 3 days of next week as positions get added, positions get rolled and whatnot. But as far as the upside goes, the bulls first off need to reclaim this resistance zone here, 43.75, 43.80. We tagged it yesterday, right, and Friday. Now we're looking for a break and a move back up to our flip level and 4,400. And this is really the level for the bulls to break, where we'll start to see some more positive gamma and where that squeeze could kick into overdrive. In other words, this may incentivize more volatility sellers to step in. So if we're starting to see VIX down 6, 7, 8%, we're starting to see that volatility compression. You probably want to be a little bit cautious fading this move, particularly via call credit spreads. I stress that point because I've seen too many people get caught in these squeezes, not really understanding the underlying dynamic. Lastly, I want to highlight our DSS cycle. This is a new custom indicator by 0DTE traders, and using this in tandem with our gamma levels can create very powerful setups. It looks at, gamma, which analyzes supply and demand, and momentum. Two indicators that often lead price. So it allows us to get in before we see a turning point and really maximize that options premium and really minimize the risk in doing so. So this is Friday. Our setups were, we had upsloping cycles. We had a put wall. So we were actually buying the dip here in the morning, looking for a gap fill G2 target where we were taking profits on our longs and actually going short. We had gamma resistance, again at G2, cycle high, cycle high. So actually two setups to sort of fade this move, to sell some call credit spreads up in this region, and another dip buy opportunity, again, another put wall type setup, which played out quite well. So if you want to learn this setup, you want to get access to this indicator, you want to learn these concepts when it comes to gamma, volatility, risk premium, you can visit our website at 0DTEtraders.com or take advantage of this coupon code here. By using coupon code GAMMA at checkout, you can receive 20% off the quarterly subscription. There is a limited quantity available, so first come, first served. Hope to see you soon.